Good morning, everybody. I hope that you all had a nice weekend. I know for some of you, you're probably still enjoying it because it's Easter and the extended long weekend for those of you in Europe and the US. We don't get this out in Asia, but we have other holidays to compensate for it. So if we look at the markets for last week, it was a fairly flat week all in all. Obviously, we didn't have any trading going on in the US or Europe on Friday. So it was only a 4-day trading week, and of course this week with the Easter holidays will only be 4 days as well, given that today is a holiday also. So we saw the Dow was down 0.4%, the Nasdaq down 0.5%, the FTSE down 0.9%. We did see the Nikkei and the Chinese Shanghai market up. Nikkei was up 1.6% and Shanghai was up 0.8%. With the DAX losing just 1%. So as you can see, majority negative in the major indices, but at the same time, somewhat of a small losses. Nothing to worry about, and less volatility than we've seen so far this year. The bundle of four were up 0.7%. Once again, although nothing to write home about those sort of returns. At the same time, it emphasises the point that they seem to continually do better than the market as a whole. We saw a continuing strengthening US dollar in the currency markets. We had a lot of talk about a possible interest rate rise as early as April, which would have caused a strengthening in the US dollar. Of course, the unfortunate events in Brussels and also the continuing talk about a Brexit and the European Union and Britain's possible departure from there is causing sterling and euro to fall a little bit as well. We saw the US dollar against the euro. We saw the dollar strengthening 0.9%, which is just over 112. We saw the dollar strengthen over 2%, 2.3% against sterling, and now it's at 141. We also saw it strengthen against the Chinese yuan to 6.5. and the Japanese yen to just over 113. So we continue to have a very strong US dollar, which is only going to be buoyed by the potential interest rate rise, which they think is going to be 2 or 3 this year. But I mean, all in all, it shouldn't still make a huge effect on the equity markets because 0.5%, 1%, hopefully you still want to get better returns on your money than that. So if we look at the sporting last weekend, we had obviously a fantastic win for England against Germany in the friendly. Of course, as everybody that follows the sport knows, over the years, England may have done well in the friendlies, but when it comes to the actual major competitions, the Germans have always had that edge. So let's hope it doesn't happen this time, but let's not dwell on it either. Enjoy our moment. 2-0 down, came back and won 3-2. It's also worth mentioning, as those of you who listen to me regularly know, that I'm a boxing fan, and hopefully it's just a standard process with the Eubank Blackwell fight, where unfortunately Nick Blackwell was put into an induced coma afterwards. And there's some interesting footage on the internet at the moment, which actually shows Chris Eubank Senior, Junior's father, actually asking him not to punch his opponent in the head anymore, because he was scared of the consequences of what could happen. And sadly, it looks like Chris Senior may have proved to be right. But at the same time, these induced comas are part and parcel of a medical process. And let's just hope that he's okay, and our thoughts and prayers are with Nick's family right now. Just to look at the other parts of the market, gold fell again. I've never really talked about gold. I don't think gold is somewhere interesting to invest. Somebody that taught me a little bit about the investment game always said that he found it an impossible market to understand. And I also don't like investments that do not give yield. So as one of my sort of mentors once put it, gold has been put back in its box with some pretty dramatic falls down to its 5-week low. I think when Armageddon and the panic monkeys are out there, like we experienced a little bit at the start of this year when we saw the massive fall in the Chinese market, people think of gold as a safe haven. Personally, I don't have any of it in my portfolios. I understand if some managers want 5 or 10% if they feel that that's there to give the client the safety or the comfort they require, but not for me. So that's about it for today. I'll let you go. Enjoy your week. If it's a short one, enjoy the rest of your day off today and the next 4 days to come. I'm going to be in Vietnam for the rest of this week and then back to Thailand for next week. So anybody wants to come and see me, give me a shout, give me a call, give me an email, give me a tweet, give me a text, whatever it may be. Cheers. Have a nice day.